we should also talk. I've had requests from the audience to talk about gold and silver. Gold is doing really well, really, really bloody well. In fact, I'm going to quickly look it up. It was soaring past 4,000. Let's have a look. Where are we today? This is giving me in pounds. £3,200. Let's put it. Everybody trades in dollars. Yeah, bloody hell. 4,340. I mean, gold is doing absolutely stonking. Absolutely stonking. Gold is a bit like Bitcoin in this way, in that it responds to liquidity injections. I remember years ago when I was in my 20s. I mean, even back then, I was very conscious of debasement, which I mean was very money printing, but it was very much in its early stages then. But I could appreciate that gold held its value over time, and even though I was in my 20s and I was probably spending more money than was sensible, I had quite good earnings back then, and every time I got paid, I'd go along to the local bullion dealer and I'd get a few more gold coins. I maybe I should have got into, I don't know, coke and hookers or something. I would have been able to spend all that money, but that wasn't my thing for whatever reason. So I just bought gold instead. So anyway, I was buying all this gold, and the desk I sat at, I was next to the CEO, and I remember coming back one time with my fistful of gold ounces, and he kind of looked at me in disbelief and said, you're buying gold today? Gold hit a new all-time high today, and you're buying gold today? And I was like, yeah, because over the long term it will hold its value, and paper money won't. So yeah, I'm fine with it. Now, I still got those gold coins, and the price that he was berating me for buying them at was it was just shy of 1,200, so 1,200, and today we're looking at 4,300, whatever I said. So gold has done exactly what I wanted it to do over that time. I had excess earnings, and I wanted to defer it into the future in a way that fully kept up with debasement and possibly add a bit more on, and it has beautifully done what it was intending to do. So it serves its purpose very well, and it's a wonderfully secure asset as long as somebody doesn't club you over your head and take your gold coins. But it's a wonderfully secure asset. It's outside of the system. Love gold, always love gold, but I don't put any excess. I mean, I work for the Lotus Eaters now, so it's not like I have a lot of excess earnings. But if I did, I probably would be locking them up in gold today, because basically Bitcoin is just better. It responds better to debasement better. I should also cover what's the deal with gold going up now before liquidity and Bitcoin going up after liquidity. Because basically, whenever gold goes up, Bitcoin then normally goes up about 9 months later. Something like 6 to 9 months, gold just precedes Bitcoin. So now that I'm primarily a Bitcoiner rather than a golder or gold buyer, I'm very happy to see this rise in gold, because it normally is a herald of the liquidity flows that then feed into Bitcoin, and Bitcoin is just a higher alpha than gold. I say gold pretty much holds its value. I don't think the cost, the value of fiat currency has dropped 3x between now and when I was in my 20s, possibly. So, but it's probably not a huge order of magnitude off of that. So my gold has held its value. It's done its job, but I've seen no sort of great exponential returns. Obviously, if I'd put that much money every month into Bitcoin when it came out, I'd be in a tremendously different situation. I'd be on my mega yacht right now, possibly not podcasting. So gold has broken out to all-time highs. It precedes the the big injection of liquidity, typically by sort of 6 to 9 months, and the sort of the breakout in Bitcoin. It's interesting that that's happening. I'm trying to think through my head, why does it happen? Why do we see this relationship between gold, liquidity, and then Bitcoin? Why do they stagger out like that? One idea that I have that I'd like to test and I'd like to throw out there, and maybe I'll do this on financial Twitter later and just see what people think of it, is very possibly the central banks all know what's coming. They know, I mean, they all get together and they all coordinate. Because they don't want the system jarring and breaking like tectonic plates going against it. They want everybody to be on the same path so the whole system runs smoothly. So I'm pretty sure they've all agreed, or at least in my mind, what they've done is they've all agreed, okay, this is the date when we really start ramping it, and then we start rolling over our debts, and it will probably be whatever's the most convenient for the US, and then everybody else kind of works around getting that in line. So I think they all know that this liquidity is coming. And the reason that gold precedes the liquidity injection is because central banks are like, okay, well, paper money is about to go to shit, even more so than it normally is. How do we hedge against that? Well, we can buy gold. So I suspect that central banks, it will emerge shortly, have been doing a lot more buying, and everybody even vaguely associated and hedge funds that pay extra for information from the inside, put it like that. Not that I'm accusing them of doing anything illegal, but those who pay a bit extra to learn things early are probably like, yeah, okay, this liquidity is coming. Let's get into gold now. And they're giving them that protection. That could be happening. Silver also has been going interesting. Let's see if I can, on my little thing, can I get silver? What's happening in silver? Give me a chart that goes back more than an hour. Right, well, silver's at 54, which is a strong price. I'm not sure how that's behaved over. There's a charts button. Silver chart. Yep. For God's sakes, change a period, not a week. Yeah, give me a year. Give me a year on silver. Oh, bloody hell. Okay, right. That silver has... I didn't realise it was as low as that before. I looked at 40 and I thought that's a damn good price, but it was sort of mid-20s a year ago, and the chart just looks like that. It looks like a very dangerous ski slope. Yes. So silver has been absolutely mental as well. Again, you sort of expect that because silver is basically, it's a precious metal, so it's in the same category as gold. Everybody sort of thinks of them together. But it's also an industrial metal. It's also got lots of practical uses. There is more of silver in terms of its abundance in the earth, but because it keeps getting used, for example, every Tomahawk missile has well over a kilogram of silver in it, and of course, the nature of Tomahawk missiles is that when they're used, it's a bit tricky to recover the silver because it's very finely smeared over, parts of the Middle East. I think it's like 15 kilograms of silver the average Tomahawk missile has, with all the circuitry, high-grade circuitry that it has in there, and a whole bunch of other industrial uses. So the actual amount of recoverable silver is not as much as you would think it is, even though it's more abundant. It's like 15 times more abundant than gold in the Earth's crust and all that kind of stuff. So yeah, silver is just gold on steroids, which is a bit more exciting, a bit more volatile on the upside and the downside. Gold precedes liquidity. Bitcoin follows it. Generally, everything that I'm seeing just points to the thesis that I laid out in previous episodes of Brokenomics holding up. Don't really see anything in this that is suggesting anything's gone awry. The only thing that I perhaps should have spotted earlier is that COVID just dragged it all out, gave them an extra year, meaning the upside comes a year later. But all the indicators, all the pointers, all the ducks lining up right now just tell me, okay, yeah, well, we should be getting to the end of the boring bit fairly soon, especially now that Jerome Powell is kind of subtly hinting that he's going to turn the liquidity taps on soon. So I don't think the liquidity cycle's failed. It's just been delayed. Unique circumstances of COVID and the debt extension that given them. The post-pandemic distortions have mostly been put to bed. if you go on social media, not so long ago, everybody was complaining constantly about inflation. You just don't see that anymore. The underlying structure, the debt, the aging demographics, things we talked about before in more detail before, liquidity, that still governs everything. So, I don't think that, anything's changed and we changed track. It's just, track's just got a bit longer.
If you would like to see the full version of this premium video, please head over to lotuseaters.com and subscribe to gain full access to all of our premium content.